Hey everyone, and welcome back to the channel. Today, we're tackling a huge question I get all the time. Can I actually invest in real estate if I do and have a ton of money? The short answer is a resounding yes. You don't need to be a millionaire to start building wealth through property. In this video, I am going to break down 5 practical strategies for getting into the real estate game with a small budget, right here in the USA. We'll cover everything from creative financing to lesser-known investment types. So if you've been dreaming of owning investment property but thought it was out of reach, stick around. This video is for you. First up, let's talk about house hacking. This is probably the most popular, accessible strategy for beginners. The concept is simple. You buy a multi-unit property, like a duplex, triplex, or even a fourplex, live in one of the units, and rent out the others. The rental income from your tenants helps pay down your mortgage, and in some cases, can cover it completely. This means you could potentially live for free or at a significantly reduced cost. The best part: when you're buying a property to live in, you can qualify for owner-occupant loans like FHA loans, which often require a down payment as low as 3.5%. Instead of saving up 20% for a traditional investment property, you can get in the door with much less. After living there for a year or two, you can move out, rent the unit you were in, and now you have a fully cash-flowing investment property. It's a brilliant way to have your cake and eat it too. Next, let's explore the world of real estate investment trusts, or REITs. Think of a REIT like a mutual fund, but for real estate. Instead of buying a single physical property, you're buying shares in a company that owns and operates a portfolio of income-producing properties. This could be anything from apartment buildings and shopping malls to office spaces and data centers. The beauty of REITs is their low barrier to entry. You can start investing with just a few dollars by buying shares through a standard brokerage account, just like you would with stocks. It's a completely passive way to earn real estate income, and since they're publicly traded, they're highly liquid. You can sell your shares anytime. This is a fantastic option if you want diversification and exposure to the real estate market without the headaches of being a landlord. You get the benefits of property appreciation and dividends without ever having to fix a leaky faucet. Strategy number 3 is a bit more hands-on, but can be incredibly profitable. BRRRR. This stands for buy, rehab, rent, refinance, repeat. Here's how it works. You find an undervalued property that needs some work, a classic fixer-upper. You buy it, often with a short-term loan or even cash if you can pull it together. Then you renovate it to increase its value, a process known as forced appreciation. Once the rehab is done, you place a long-term tenant in the property. Now that it's updated and generating income, you go to a bank and refinance it based on its new, higher appraised value. The goal is to pull out your original investment and the renovation costs, and sometimes even more. You then use that money to go and do it all over again. That's the repeat part. This method allows you to recycle your initial capital over and over, acquiring multiple properties with a relatively small amount of money upfront. It requires more knowledge and effort, but the potential for scaling your portfolio is massive. Okay, let's talk about seller financing, also known as owner financing. This is a creative financing technique where the seller of the property acts as the bank. Instead of you going to a traditional lender for a mortgage, you make your payments directly to the seller. Why would a seller agree to this? Maybe their property has been on the market for a while, or maybe they want a steady stream of income without the hassle of being a landlord. This can be a huge win for a buyer with a small budget. You can often negotiate more flexible terms, a lower down payment, and you might even be able to get a deal done if you do and qualify for a conventional loan. Finding these deals takes some networking and looking for properties listed as for sale by owner. But it is a powerful way to acquire property without needing a huge chunk of cash for a bank-required down payment. It's all about finding a motivated seller and creating a win-win situation. Our fifth strategy is to invest in real estate through crowdfunding platforms. This is a relatively new and exciting way to get into the market. Real estate crowdfunding websites pull money from a large number of investors to fund big real estate projects, like developing an apartment complex or buying a commercial building. As an investor, you can contribute a small amount, sometimes as little as a few hundred or $1,000, to become a partial owner in one of these large-scale deals. You get access to institutional quality investments that would normally be out of reach for the average person. The platform handles all the management, so it's a passive investment. You simply choose the projects you want to invest in and receive your share of the profits. It's a great way to diversify your investments across different property types and geographic locations without needing a lot of capital for any single one. Now that we've covered these 5 strategies, let's touch on a crucial point: finding the right market. You don't have to invest in your own backyard, especially if you live in a high cost of living area like New York or San Francisco. Look for emerging markets in the Midwest or the South where property prices are more affordable and the potential for cash flow and appreciation is strong. Do your research on job growth, population trends, and local economic drivers. A city with a growing university or a new major employer moving in can be a goldmine for real estate investors. The internet makes it easier than ever to research and even invest in properties from a distance. The key is to find a market where the numbers make sense for your budget and your investment goals. Don't let your local high prices discourage you. The right deal might just be a state or two away. Finally, a word on education and partnerships. The most important investment you can make is in yourself. Read books, listen to podcasts, watch YouTube videos like this one, and connect with other investors. The more you learn, the more confident you'll become and the better you'll be at spotting good deals. Also, consider partnering up. If you have the time and knowledge to find and manage a deal but lack the capital, you could partner with someone who has the money but not the time. A partnership can be a great way to get your first deal done. You can pool your resources, skills, and knowledge to achieve something that neither of you could do alone. Just make sure you have a solid legal agreement in place that clearly defines everyone's roles, responsibilities, and how profits will be split. So there you have it, 5 concrete strategies plus some key tips for starting your real estate journey on a small budget. We talked about house hacking to live for free, investing passively in REITs, the powerful BRRRR method, using creative seller financing, and leveraging real estate crowdfunding. Remember, the key is to start. It doesn't have to be a mansion. Your first property is just a stepping stone. Choose a strategy that feels right for you, educate yourself, and take that first step. Building wealth through real estate is a marathon, not a sprint, but it's a race that's accessible to everyone, regardless of your starting budget. Thanks so much for watching. If you found this video helpful, please hit that like button, subscribe for more content, and let me know in the comments which strategy you're most excited to try. See you in the next video.